Welcome to the Business of Soil Health. I'm Patrick Smith, the founder of Soil Upside.
And I'm Sammy Telleton, the co-founder of FarmRaise. Welcome, Dom, to the Business of Soil Health. We're so excited to have you with us today.
Awesome. Happy to be here. Thank you.
Of course. This season in the podcast, we're exploring the 12 financial levers of soil health. And in particular, today with you, we're going to dive into supply chain decarbonization efforts and ecosystem asset markets. You have such a robust background in these spaces with a focus on financial engineering and environmental markets, having been at the Chicago Mercantile Exchange, the Soil and Water Outcomes Fund, and Quantified Ventures, and now at Millpont. There's so much to dig into with you. Why don't we start by hearing a bit about how you got here?
Yeah, thank you, Sammy. So journey really started born and raised in Iowa, growing up around production systems, and felt an affinity and attraction towards commodity markets and mathematics. And that's where my career started at the Chicago Mercantile Exchange, really kind of at the intersection of production agriculture and some of the what they called the alternative asset bucket, which is where they stuck renewable energy, climate, like weather derivatives, and renewable energy and carbon. So I had really kind of cut my teeth looking at where commodity markets and environmental attributes were increasingly becoming intersected, and saw an opportunity really to get my boots dirty and on the ground, and had a chance to join Soil and Water Outcome Fund as kind of patient zero for their efforts in getting that from pilot to commercial scale, and moved my family from Chicago to Iowa to really help set that up and designing those systems and the processes that now is really one of, I think, the premier insetting programs in the country, working with companies like Cargill and PepsiCo as strategic partners on that platform. At that point, there were some obvious pain points in the insetting market and at large at agricultural, let's say, carbon markets that we identified. There really wasn't a great way to say, hey, how can I verify that this field and farm isn't being enrolled in an Indigo and an ESMC and Soil and Water Outcome Fund. And that was really where the impetus to Millpont and motivation to create a clearinghouse came from. So that's, today where we're at is standing this up. And, a couple of years ago, it was an idea. And now we're a little over 21 million acres and 19 data custodians on 4 continents and counting. So excited to see how this is really, there's a demand for higher integrity claims, and we're helping underwrite that.
It's super cool. So I think what I'm hearing, Dom, is that you're creating a key piece of infrastructure for the ecosystem asset market, particularly in terms of corporate supply chain efforts. And as a result, you sit at this really cool intersection, this great crossroads of where the capital is flowing and in what ecosystem claims are being made. But it's also sort of esoteric, right? It's like abstraction on top of abstraction. We're talking about like a clearinghouse for ecosystem asset markets. So can we start to unpack that a little bit? Maybe we start with just ecosystem assets. Like, how do you think about those? How do you define them? You mentioned ESMC and a couple other, sort of protocol or ecosystem asset market facilitators. So help for folks that aren't necessarily familiar with ecosystem assets generally. Can you give us a little primer?
Yeah, I think a great way to think about this is, data in itself can be informational, but there's a key point where that data, and this is saying let's data related to environmental improvements like your carbon, your water, your biodiversity. It becomes data. It's raw form, and it's raw form. It's information. It can be used for analysis, but really there's a section where it goes from data and becomes an asset, and I think that's a key distinction. And doing that is really the work of what we call our data custodians, where these companies like the ARVAs, the ESMCs, they put this data and they produce this under their standard through their standard or their protocol. And then they actually put it onto infrastructure, very similar to how, oil or raw materials from like timber, they're natural resources until they're, mined, harvested, and put onto pipelines or railroads and delivered to where they meet a need for higher value consumption. And that's very much how we think of turning data from into these environmental attribute markets, whether that's carbon, water, biodiversity, is transforming it through kind of securitization, through transformation, and really through monetization is kind of the life cycle, if you will. And that's done today across, I think there's, 172 different types of standards and counting just in carbon alone. So there isn't one flavor of what an asset looks like, but I think the common core threads of that is there's some sort of underwriting procedure, some sort of infrastructure, and some sort of transaction taking place.
And so just to continue to sort of ground this idea of ecosystem assets, the farmers and the ranchers who are getting paid for ecosystem asset production, so to speak, they're the ones that are interacting with the ARVAs and the ESMCs and other project developers to generate those ecosystem assets. And you're sitting in the data flow about those assets themselves.
Correct, Patrick. And that's exactly where we see METI's, Millpont Environmental Trust Infrastructure is the name of so I'll refer to that typically as METI. We see that as a core component that enables this data to turn into an asset that can now actually derive value and economics back to producers. And without that, we're kind of in a wild west, if you will, of where a lot of folks are creating, different modalities for doing this. So if we kind of harmonize some of the core functions of front and back office that everyone can kind of share, helps everyone reach a little more efficiency in the market, which means that there's more value and the economics can flow with more smoothly back to the producers as they do in kind of corn, soy, commodity markets at large.
That's so helpful, Dom. Thank you for illustrating that. On the side of Millpont and the work that you're doing, can you explain the concept of a clearinghouse for these assets and the role that plays?
Yeah, so a clearinghouse, and there's clearinghouses in lots of actually types of markets, or let's say industries. So in healthcare, there's clearinghouse for patient data and record keeping, and in actually states, there's clearinghouses for voter rolls. That's how they kind of compare that one registered voter isn't actually registered in multiple states. And in financial markets, clearinghouses ensure that there's one buyer to one seller. There's the MLS is a clearinghouse in real estate. So when they say, a house is being sold and it's being the deed's been transferred, that deed hasn't been transferred to multiple buyers. So this is really similar thinking, is that we were missing a clearinghouse for environmental attribute, for sources, particularly of environmental attribute certificates in agricultural supply chains. And that's where METI was born, is in that clearing function, is ensuring that when one field is enrolled in one program, it's not being duplicated across other programs or projects. So clearinghouse is kind of usually comes at some stage in a market maturation from in between, where it goes from projects. And I kind of think of things as going from projects to products. So when we see things that are being paid for by a metric ton today, I really see in the future things are more as carbon is an embedded attribute, and you see kind of premiums for the carbon quality and characteristics of a given product. Meaning, where right now I think the market's used to paying for metric tons tied to a regenerative ag program on a field of corn, soy. In the future, and seems to where the market's heading with CI certificates and CI in general, is that there will be premiums or value derived from the actual carbon profile of that corn or wheat or bushel of a given grain commodity.
By CI, you mean carbon intensity, just to clarify.
Yeah. Yes, correct.
It sounds, every market has sort of three main elements, right? You have supply, you have demand, and then you have a governance layer so that the supply and the demand can be sure that what's being transacted is actually, legitimate and has integrity. And it sounds like you're building a key governance element to this entire ecosystem asset, corporate and supply chain decarbonization effort.
Yeah. And actually, it's funny. We always think of a market as, I always say this market has three things. It has a supply, demand, and a methodology. But to your point, it's a governance mechanism. It's a contract. Futures, derivatives, exchanges are actually just the same contract traded, million times over and over on a daily occurrence. And that contract is standardized to such it represents the underlying cash commodities on average, and it's on average enough that people can use it for a risk management tool relative to their local, quality and production practices. We see kind of that governance needs to be implemented on something, right? Like regulators actually need to say where the flows of these contracts are going in order to ensure that, the market's conducting itself without market manipulation, without, practices that would be beneficial, without kind of monopoly or fraudulent activities. So while we're not so much a regulatory authority, we are creating infrastructure that regulation can be implemented upon. And we're actually doing that very thoughtfully and starting without saying, working with folks and ensuring that they have a line of sight that, hey, regulation in these markets it's kind of a given at a certain point. And that regulation might be, to encourage the production of environmental attributes, or it might be to actually say mitigate the activity and behaviors of the market participants so that they're doing things lawfully. But right now, the regulation is always going to be increasing, and eventually it's going to need a place to be implemented. And that's where we're building with the future of, we want to support that regulation being done in a way that actually helps the market grow versus, picking winners and losers.
There's some really interesting parallels with the financial industry where FINRA, the financial, industry regulatory authority, is essentially the industry's own regulatory authority so that they can mitigate the amount of SEC regulation, or at least interface with that, right? So it sounds like what you're trying to do is build the equivalent of the FINRA for ecosystem assets.
Yeah. And in my background, I started actually in market compliance and market surveillance. So setting up the systems to actually govern and, I guess, surveil the largest players in agriculture commodity markets. So some of that learning and lessons has actually flowed into how we derived our rule book for how our users can actually, administer claims on our ledgers and on our infrastructure. It's really driven by that we need kind of a standard set of rules to the road to help govern, critical market behaviors around onboarding and originating environmental assets. And that is, to Patrick, is kind of helping really drive some of that behavior ahead of the regulations that we know are going to be coming. And right now they're kind of coming in a market driven demand for higher quality. I think the way we kind of see that drive for quality integrity is really just asking for folks to ensure that, they're not doing anything to weed out the bad actors. And I think that's a great way for us to support is driving integrity at scale, and doing so in a way that doesn't actually add friction to today's workflows that are already complex and convoluted.
That's a tough balancing act when you're making a market so professionalized and regulated. And so it's great that you're tackling these challenges, given all the experience that you have, Dom. I'm curious, as you think about the road ahead, you're really committed to this farmer first perspective and structure. How do you think about farmer first in terms of data ownership or other regulatory frameworks?
And I want to actually credit someone who I think would, if he hasn't been a guest, you guys should definitely invite on to, would be Adam Keel at Soil and Water Outcomes Fund, who I really credit with teaching me or imparting lessons on what it means to be farmer first. And I think it's a lens that you can actually adopt by saying, if I'm a farmer and I have a ton of decisions to make on a given year across my inputs, what type of commodity to produce, the how that might benefit or suffer in market conditions and in the climate and region you're in, there's so much complexity to just being a farmer that if we don't create a easy way for them to adopt market mechanisms related to providing economic value to their sustainable outcomes, these things just won't get off. They won't work. And I hear a lot of well-intentioned, well-meaning organizations creating cool new technologies that are going to unlock, the soil carbon gold mines that will solve climate change. But I think a lot of that is missing is getting in front of farmers and asking them, does this solve the pain point that you have every day as a farmer in your operation? Which is, to me, we have an on-site right now where we're bringing in our chief product officer from London, our engineering team from Philadelphia, and they haven't really been in too many fields in their life. And we're going to be spending half a day with farmers in the field, so we can just really have an understanding and walk in their boots, even for a few hours, which isn't any sort of, substitution, I would say, for being a farmer, but it's a great way. And I think everyone who's developing systems, technologies needs to take that time to do, just to get a better empathy, but also to make sure that what we're creating in terms of methodologies, mechanisms, systems are designed with the folks who are actually going to be the stewards of the systems we want to develop.
100% agree with that, Dom.
Can you talk specifically about Sammy's question on data ownership? Because I know that that's really important to a lot of producers.
Yeah, and thanks for bringing me back to that, Patrick. The data ownership, I think data is the new cash commodity of tomorrow's markets. And so much of that right now is given up without the correct value being attributed to it. And that is, in part, that's education, where the market's at. People are, signing up for things and they don't realize how much they're giving up. We do it every day when we sign up for a new social media account or, a new app. And I think where we have a world that's, data is increasingly valued and it is the underlying currency, whether that's for environmental markets, whether that's for, data markets. People do trade data actively, and whether that's for other types of claims that are going to be attributed, even regenerative programs, if you will. That data is right now, it's kind of unstructured, kept in different places, siloed, not talking to each other. So the more organized it is, the more secure it is. I kind of think of data as like, if I'm a farmer, I want to make sure I'm putting that in a bank account and not under my mattress, and that it's organized in a way that I can maximize its value when an opportunity related to some sort of, payment for ecosystem practices or regenerative claims comes along. So really that, and also then being able to see who is using it is really important. I think that, farmers understand when they deliver their trucks to the silo, that silo is probably either, going into an export market or it's going into some local processing capacity. And that kind of attachment to understanding where the value chain and being able to actually feel it tangibly and recognize that you're providing food to the world or creating some sort of product that you can buy off the shelf is really important and missing today with data. And that's why I think data ownership is going to be important, because a farmer can now say, hey, I'm helping this global CPG or this country meet its climate commitments, or being, let's say the the source of the lowest CI feedstock in the world. Corn farmers in Iowa and the US are actually producing the lowest carbon intensity feedstock for ethanol in the world right now. And that's something that I think should be celebrated, but they might not always have that understanding because the data is just kind of given up today, or it's not recognized by today's markets.
And just to put a really fine point on the data ownership piece, you have access to the data, but you don't control anything about who owns the data. That's the custodian's role or the project developer's role to define that with the producer.
Exactly. And if you are a custodian on Medi Network, you actually you are agreeing that the data you are administrating on our platform, you have secured those rights to do so. And it's not something that we take seriously. We have auditing capabilities and actually have that as part of our membership. Is we have the rights to say, hey, if you are administrating data on behalf of farmers, you must have made sure that you have either have some contractual agreement or paid for that data in order for it to be turned into an asset on our network.
Thanks for clarifying that, Dom. It's great that you're auditing and checking on that and bringing this level of sophistication in to ensure that data is treated well and that the folks supplying it are treated well. You mentioned earlier some market dynamics like the shift towards CI, and we'd like to dig into market dynamics with you and get your take on what you're seeing, especially in the US, and we can get into other geographies as we talk. In particular, I'm curious what you're seeing in terms of offsetting versus insetting or supply chain programs more broadly.
Yeah, it's I like to say when I was at CME Group, you start to recognize patterns and markets. I'm going to allude to my professional career. I spent some time gallivanting around the world, surfing and snowboarding, following the waves in the snow. And I'd like to say when you're at CME Group, you have a broad enough view and you're high enough up that you can kind of start to see waves forming in markets. And one of the waves that I saw was offsets, but right behind that was insetting. And right behind that was CI certificates or carbon intensity. So it's been cool to be part of some of those waves, but also now seeing the CI one really rising. And I think that's where the market's heading. It also isn't to say that those other waves are sunsetting. I think that's where this allegory to surfing dies. But I will say, we need everything under the sun, and there's going to be those all, in my mind, represent tools, market mechanisms, and tools that can be useful under the right context with the right producers, the right production regions, with the right offtake partners. And we need all of them because not every farm field is going to be able to be appropriate for one or two of those, and you need options. And I think from my opinion as a former economist, that's the coolest thing I see right now, is that we actually have options for these environmental attribute certificates, and I say environmental attribute certificates is my broad bucket term for carbon, offsets, insets, renewable energy, RINs. It's the capture-all for me. So the more options we have, meaning there's more competition for demand, meaning that there's actually higher value for these environmental outcomes and money that can now flow back to the land stewards. So that's, I think, what I'm more optimistic about than anything. And with CI, I think, going to becoming a dominating fact in row crop production specifically. And a lot of that's going to be driven because there's biofuels has given that a bit of a head start. But the other markets aren't going away. I think they're just going to kind of evolve to work together and actually have some competition for once for the outcomes coming off a given acre.
Do you see different cropping systems or livestock systems being more appropriate for offsets versus insetting versus CI? You mentioned row crops for CI. Are there other is there a mapping exercise we could do of these different markets to different production systems?
Yeah, we see, and I don't know if this is trend or if this is just our view given the perspective we have through our Medi custodianship members, but we definitely see grazing and rangelands migrating more into the VCM, where that, long-term agreements for 30-year crediting periods is probably much easier to do on a pasture and paddock level than it is in, leased row crop land in some of the I states. I states, Midwest row cropping, we seem to be trending towards scope 3 and in the CI side. We know of certain CPGs that are spending tremendous amounts of capital on investing in transforming these systems, are moving their entire procurement mandates, from a metric ton to a CI based methodologies. So that is, I think, a good, not only does that line up with what we've already seen proposed in 45Z and some of the state run production tax credit systems for biofuels, but it kind of also helps line up with the carbon accounting gods and SBTI and GHGP, who and this is kind of, I think, important to call out, is in all of these climate goals are based on inventory accounting, not project-based accounting. Project-based accounting is the unit is metric tons. Inventory is all in CI. So this is kind of where I think is a bit of there's a push-pull to this movement, and that you have the push coming from the producers or the biofuel processors that want these CI scored bushels into their system. And then the pull being from, we have this guidance out there in the carbon accounting standards that are really saying, hey, if you want to be in line with our carbon accounting, you need these inventory methodologies in place.
So I think what I'm hearing from you, Dom, is that for pasture land in particular, because it's perennial systems, you have project-based accounting and voluntary carbon market, maybe some insetting as well. But for row crops, you have inventory-based accounting that is much more carbon intensity focused.
And that doesn't say there's not offset. There are a few folks still creating offsets based off of row cropping systems. I do, you just kind of look at the market size of opportunity of farmers willing to engage in a 30-year crediting with, where they're every year facing different types of market and climate risk. If you need to till your ground because you've had a drought or impact rain, do you have that freedom of operation to do so under one of these 30-year carbon contracts in the VCM? Most likely not. And that's really just a tough obstacle to overcome. So with these annual CIs, an annualized unit, it's per year, per bushel, falls into the kind of the annualized cycle of these cropping systems. And I think it makes a lot more sense.
It's a lot more geared towards production ag systems too, where you don't have to deal with additionality and permanence and, all of the sort of carbon crediting stuff that has come out of forestry.
Yeah, exactly. And that's the other one where forestry is still, I think, another perennial crop. If you think of trees as a crop, makes sense to go into long-term VCM methodologies and protocols.
Even though we're talking two different forms of carbon markets, so to speak, you have the voluntary carbon market and carbon credit on this side, project-based accounting, and you have inventory-based accounting with CI. It's all still carbon centric. So I'm curious if you can talk about these other ecosystem assets that in some ways are much more reflective of complex ecosystems around water and biodiversity.
I'll start. Love that question. I'll just start with, I have a soft spot for water. Former portfolio manager of one of the first voluntary water credit platforms at SWAF. I think water is really one of those that opens up the market even more in terms of maturity, but economics that can now be realized for the same conservation practices that produce carbon benefits and soil health. So you have we see there's right now a lot of some piloting around paying for nitrate mitigation, phosphorus mitigation, and then water conservation. So, we have folks that are looking at ways to model and then monetize the same on kind of the same modality that a scope 3 credit would be traded in. Very similar is what we're seeing for water quality and conservation. The big driver on the water side right now, I think that is also been in the headlines more recently, is the data center push. And that's real. Those are real dollars with real kind of actually EPA mandated carrots and sticks behind it on some of the water discharge requirements coming out of those, depending on what jurisdiction you're in. So it's exciting, I think, to see water is one of those that is the most mature behind carbon, and you have actually voluntary and involuntary mechanisms driving it. Biodiversity, I think, has the most potential at written large for actually valuing the true, let's say, benefits of nature. But because of, the broad umbrella it sits under, defining it and creating a standardized unit for biodiversity, I think is going to have the largest obstacle to overcome for creating a robust market for those. But definitely see some of the leadership in the EU, the UK, where you have some of mandated biodiversity mechanisms similar to mitigation banking for wetlands or specific species in the US. They've really implemented that and shown what a model could look like at a national level within the UK. And I think if that is kind of emulated across, could be, it really just takes a few policymakers and a few states and or nations to start leading, and others typically will follow as it becomes, in my opinion, like a competitive advantage.
How do you think about the state of the market right now? I know we're at a certain level of legitimacy given Millpont exists, right? Do you feel like we are in a mature market? Are we still developing? And how do you think about the momentum? Is it expansive? Is it contracting?
Yeah, and I probably look at the market a little more optimistically than most right now, given the headwinds we've suffered recently. I think on the political side, and maybe even kind of the headwinds some of the private investment has been facing in this. But and I'll kind of caveat that why I think I'm more optimistic is I actually see like the recent cycle as more of a sign of maturation, and in every market goes through, kind of predictable stages of market maturation. One of them is, kind of a concentration of players and consolidation phases, but also just, I think the signal I've gotten, the loudest from this latest cycle down, and I'll call it more or less a down cycle, which is interesting I'll back this up with some data too. The latest down cycle is also the folks who are going to do it, regardless of the headlines, are actually growing. They're still there, and actually they might be posting less headlines, but they're actually still growing their investments and their operations and actually maturing. I would say we see a lot more folks creating internal capacity to manage large scale decarbonization programs, and they're investing in the teams and the infrastructure. And I think the folks who were just doing this as dip their toes in the water, maybe wanted to try this out to get a headline or two out. Yeah, they're closing up shop and they're saying we'll wait for the next round or the next uptick before attempting that again. So I think in for lack of a better words, this kind of last cycle has helped actually the folks that were doing good work and getting ROI. It's that we've seen maintenance or growing those kind of programs and projects. And on our membership side, we had, with the latest kind of setback, we probably lost a sixth of our members, but we also replaced that quickly with, we were onboarding about 1 to 2 users on a month, and now we're at 3 to 4 users a month and 2 to 3 million acres. So I think the folks that were like, seeing chaotic conditions as an opportunity are actually looking at this as, hey, maybe we have less competition to engage with as we used to. And now we see a lot of activities that are 2-3x year over year. And I think the folks who are doing it right for the right reasons are still in there. And that's exciting for us because that's actually helping us. Most of our growth, I would say, in the acreage under management is not new acres, but actually growing acres from our users.
Super exciting for me to hear because I've felt ever since I've gotten into this space that government incentives are not the way to actually drive this. It has to be market-based incentives. But let me double click on a couple of those numbers that you shared. So you said you're adding 2 to 3 million acres a month. Is that right?
Yeah, correct.
And some of the programs are growing at 2 to 3x every year over year.
Correct.
That is crazy growth rate.
Yeah, and that growth rate is probably slowed down a little from what I knew of, when I was at my soil and water outcome fund days. That growth was 10, 11x a year. So relatively, maybe the growth rate's slowing down in the market scale because I think a lot of things are moving from pilot to commercial, and now it's commercial. Once you've commercialized, now you're in that. Let's say we've commercialize this successfully in the US, what does it look like to move to Australia? What's it look like to move that to South America, new production regions, new commodities? So I think a lot of the growth has come from folks who've created tried and true tested programs in the US and are now actually going into the globalized scale of the supply chains and the partners that they're working with.
Every time I hear numbers like 2 to 3x a year, I immediately discount that, thinking it's just the law of small numbers. Can you help us understand whether that's the case or not?
I think you kind of think of the average kind of operation in the U.S. row cropping size. Just think of it this way: is 1 to 2, a couple thousand acres for a family size operation that's just farming, right? That's where they derive their revenue. In Brazil, your 30,000 acres is not, is kind of the typical operation size. So if you're moving for every one farmer you need to recruit in the US to get to 30,000 acres, you need now one in Brazil. And so I feel like this sort of in Australia, very similar, lots of land, larger operations. And so that's kind of where I think you get this, 2 or 3x actually quite easily. And because you're dealing with much larger operations and fewer actual land stewards.
Do you have a sense for acreage saturation in these markets in the US?
It's a great question. And I'll be honest, I think that we've gotten the early adopter farmers are really maxed out on this. The majority of acres that would be willing to sign up to a payment for ecosystem service program today are probably involved in either part or whole of their operation. I think the biggest opportunity is to unlock the mass middle, if you will, is creating a mechanism that actually works for folks that are more risk adverse and they need more certainty. And that's where I think CI actually speaks to some of those pain points that aren't being addressed in the kind of the VCM or in-setting programs.
As you think about the market picture you painted and that the folks that are really committed to this are doubling down and growing the work and the number of acres that they're bringing online into these programs, what's motivating that? Is it the sustainability teams? Is it operational choices, public commitments? It's certainly not regulation. So what's the motivating factor here?
This is my opinion, but I actually think it's more risk management to a degree. And while it still might be benefiting from the expertise and the design of sustainability teams, we see a lot more, let's say, for the programs projects that are scaling, particularly in, let's say, the corporate-driven in-setting programs. it's much more about securing resilient supply chains. And really, I think they're getting enough data to actually prove that out. And where we actually see, folks that are and can think on 10-year horizons are probably are the best positioned to keep growing these platforms and projects and programs, given that they know at kind of a systemic scales and at the CFO level that if you decrease the variability of your inputs and your revenue, uh, given that your revenues will grow over time.
You mentioned that many of the corporate customers of your custodians are growing their teams, which flies in the face of a lot of the trends of sustainability teams being cut and resources being pulled out. And so I'm curious, where in the organizations are these teams being built? Are they being built on the procurement side, on the risk side, on the finance side?
Yeah, I'm going to probably do a little of this, assign some own desktop research, but it'd be really interesting to look at in jobs posted on Indeed and LinkedIn that were sustainability procurement and managing and program managers on the sourcing side of origination versus, the sustainability officer side. But that, Patrick, you hit it on the head. Much more of it's flowing into procurement or some sort of joint positions where they sit with one arm in the sustainability and the other into procurement side. And I think we're seeing a lot of the kind of a pathway for this is maybe the pilots are designed with sustainability teams and the methodologies, but then the scaling, commercialization, and the delivery performance is being reconciled and managed by procurement arms. And it's turned into kind of a standard contracting, standard negotiations. It's really exciting for us to see that is becoming more of the routine and less of the less of the minority. And I would say maybe 5 years ago, even, it was the exact opposite.
I'm curious, can we ground this for producers in some like practical kind of realities?
Yeah.
How much can they expect to get paid from some of these programs? What sort of premium are we talking about? We can keep it to CI for row crops if we want to do that. How do they find the best performing programs? Because it's super opaque, figuring out who's paying what and how to do that. Seems like you're sitting in kind of like an ideal position to be able to bring some transparency.
So I'm going to give you a range of value we've seen. I think that's the best way. Pilots, you see anywhere from 1 to 2 cents a premium on a bushel for CI. And let's say more commercial, like in more mature programs, we're seeing up to a dollar. And that's, I would say, like the dollar is less so. So, if you did some sort of a geometric average of those, you'd find probably like a 30 cents is in the realm of reasonable for a CI on a bushel.
So on a 250 bushel acre, I'm assuming we're talking corn right now.
Yeah.
You're talking, roughly another, what is that? $80, something like that.
Yeah.
Which is non-trivial.
That's like equip cost share rates for cover crops, no-till combined. Yeah.
And that's not counting 45Z. It's so when, if 45Z kicks in, I think the average corn grower is, and Mitch Hoare is the CI guy to talk to on this, but I think it's up to the average corn grower in the U.S. can expect like up to a $1.20 or something like that on a given acre or a given bushel. So it's when you start to, that's, I guess, total value of some portion of that would be shared with the grower. That's not all of that's going to the grower. Want to make sure that's clear. Those 45Z credits are given to the SAF producer or the ethanol producer. But if you think a third of that then goes to the grower, I think, that's $80 to $100 in there in that range. And that's where I think that mass middle needs an economic signal to really make sure that that determination to collect your data, share it, prepare it is something that actually you can routinely be incentivized to do. given it's not a rudimentary task. And I think that's important and really showing and valuing when people are sharing data and going through the rigmarole of collecting it and maintaining it, that's really has an economic value derived from it.
Yeah, we interviewed Mitchell Hora last season. So if anybody really wants to dig into 45Z, then that's the episode. There's a whole hour-long episode on that. The other piece on practicality was about transparency and how producers can find programs that are going to compensate them the most. How do you think about that?
I'll say what I hope we're moving from today is where a producer is they're presented with an opportunity to look at a program and evaluate if that best fits, but then they have to go through that same exercise repeatedly. It's like speed dating, right? It's very difficult to do. What I hope we get to and what we see happening more routinely is you have some trusted, let's say, intermediaries, whether they're financial institutions or independent agronomists, presenting what is more like an apples to apples comparison. And it's actually not coming from, a representative from a program. It's coming from the folks that are at the dinner table day after day with the farmers, and they're actually getting that opportunity to say, hey, this might be the best year. This might be the best opportunity for these fields, for this crop this year with these guys. And we can do it with this outfit for these fields and these crops, and to maximize and optimize. And what I hope is actually we have enough of this kind of a bit of a centralization and standardization of scenario analysis, which is becoming, I think, more routine, and that you can actually start thinking about incorporating the premiums for these in the economics of in the on-farm planning. Instead of having to react to them, they can put 3-5 year plans in place that they can give some sort of actually, hey, we're going to shift year 2 to these because we see that opportunity with the way that those platforms or programs are set up. And that actually, if someone knows they're going to be receiving acres or losing acres years ahead of time, that sort of signal is in that sort of like frictionless signal that can move from the supply to the demand side, gives the folks that they need, actually gives the signal they need to start doing decision support and long-term planning finance. So that's how kind of I went way over your kind of the basic question, yes, but that's really how we start to see when this information starts giving signals that you can do long-term decision support and planning around. That's where we see these things actually unlocked, because capital needs long-term views in predictive systems to be actually injected into. So we really see kind of like where the market's going, where producers are at today, almost going to a place in the future where they can give an indication that the demand needs, and the demand then can give an indication to the capital that it needs to help really the system connect.
As we think about the infrastructure supporting these markets, I'm curious where you think we need more investment. Millpont being a great example of this, you all are the clearinghouse. So what are the other supportive pillars of the market, the supportive infrastructure that is needed to make sure that this can continue growing into the future?
I kind of think another great question. I think one of those, we see kind of a need for policy harmonization will do a lot. So you have kind of infrastructure, you have policy, you also just have, and this one is, maybe less data backed, but it's my read is that people actually matter more than anything in standing up markets, and actually the people who believe in these so much that they're willing to take risks that help others make kind of de-risk. By taking on the risk, they de-risk others participating. And so I think right now we have quite a good group of folks, but we probably need more folks willing to stand up first of their kind things in this market, to really just, even if they fail, be willing to do so to show that like it can be done in a way that, and doing it, do it for the selfish reasons. Do it because you feel like you'll be first to market. But by doing that, you show that there's a pathway that others can emulate and follow and learn from. If it is, a failure, folks can actually understand why. And the postmortems that I've been reading recently on some of the folks that, weren't successful, and maybe the standing up the first round of platforms and programs on this have been instrumental to me as an entrepreneur in our team, and helping, maybe avoid some of the potholes that others have pointed out, but only done so because they've been there. And I think that's the real realization I have in this, is that we're building this on top of a lot of shoulders that have lifted us to where we're at. And that's just, I think, going to be how we get to the eventual state of that makes this an easy choice for producers to participate in or not.
Your answer, Dom, reminds me of our conversation with Zach Ducheneau this season, where he talked about the 5th C of credit for farmers, and how he really wants to see lenders bring the 5th C of credit to the table, which is courage. And I see that in what you just said about this market. We need people willing to take risks, to courageously come to the table and trailblaze and build things, and know that the whole market is benefiting from that exchange and that innovation that's happening.
Yeah. And yeah, I think one more thing I think kind of that's missing here is that, and you guys are, I think, tantamount to filling this much needed gap, is there's so much complexity. I forget, like, we breathe this day in and day out, but the mass majority of folks, this is, one other thing that they see in their scroll in their LinkedIn feed. And to make this actually approachable and addressable, and actually understand it at a level that, leads people to go into conservation agronomy choices in their career path, or get into sustainable business, like entrepreneurship pathways. You need folks connecting this stuff to the broader audiences. So really, that's kind of a credit to, I think, what you guys are doing. And you just need more of that, because it feels so isolated and siloed at sometimes.
Dom, I could ask you questions for another hour. I have so many other things I'm curious about, but to sort of start wrapping up, I'm curious to pose a hypothetical for you, given your knowledge of the market and given the sort of trends that you can see across the various project developers. Similar to Sammy's question about infrastructure, what are the holes and the opportunities on the project development side? Like, if you were a project developer today, what would you do?
Ooh. Well, I'd sign up for Medi. That's my first step. We're here, www.millpont.com. From there, I would really look at, and this is actually something I think we have started to see with our most recent adopters, is looking at these markets more holistically. Like, can my platform support an insetting? Can it support VCM? Can it support biofuels? And if it can't, how do I build the capacity or the partnerships and the technology to be able to? Because what we have seen with some of our early adopters to now is, if they didn't have that ability to make a move one field from insetting to offsetting, or into biofuels to an offset protocol, or vice versa, they wouldn't have survived one of these market cycles. And then offering that optionality to producers, they pass that, that flexibility to the producers, their land stewards. And that, everyone knows, options are a trader's best friend. Farmers are some of the best traders in the world. And they know that if they have a partner, an intermediary, a project developer that can give them those options, then that they can then feel comfortable doing longer term engagements.
Thank you, Dom. This has been such a rich conversation, a great guide, and I would even say not only introduction, but also maybe a bit intermediary level content on this Wild West out here in terms of supply chain decarbonization efforts, carbon intensity, ecosystem assets. Thank you for giving us the tour and for the work that you are doing at Millpont. Is there anything you want to leave our audience with as we wrap up our conversation today?
Yeah, I'll maybe just go back to this thinking of what it really means to be farmer first, and in every, just a message to everyone designing policy, protocols, platforms in this system. Are you really, like, I think we really need to think, does it work for the farmer and for the communities that we're relying on to deliver impact? Because if not, then we're not asking the right questions and we're not going to produce the right solutions. And I think it's not, and just put it out there, it's not hard to do. Farmers want to talk to people about what they're doing. You just need to find, and you could, anyone is invited to come visit some of my friends with me in Iowa. If you're ever in Fairfield, Iowa, please let me know. DM me in my LinkedIn, and we'll get you out in the field with some of our friends and really see what it looks like to be in their shoes and in their combine. So that's an open invite. I'll just leave here for anyone who wants to take me up on it.
That's so generous, Dom. Well, thank you for that. And thank you so much for your time today. It was great chatting with you.
So good.
Sammy,
Dom. Thank you
Patrick.
so much.
Yeah. Thank you so much, and really appreciate what you guys are doing, and can't wait to come back here in a couple of years and talk about the next stage.
Maybe sooner.
Hopefully sooner than then.
Yeah, perfect.
Thanks for listening to this episode of The Business of Soil Health. Our goal is to explore how new financial tools may or may not support producers' stewardship of their soil. We love hearing from listeners, so don't hesitate to reach out with any suggestions or guests you'd like for us to feature. And don't forget to subscribe or leave a review on your favorite podcast platform.